Thank you for choosing to watch this video. For more videos on the best stocks to buy right now, please press the like button and subscribe. With that being said, let's dive straight into today's stocks. During bullish markets, investors often rush to acquire the most promising growth stocks, while bear markets breed caution, discouraging investors from entering the downward trend. Nevertheless, adopting a contrarian perspective could lead to substantial long-term gains. Amid economic uncertainties, top-performing growth stocks shine as symbols of resilience. Bloomberg analysts anticipate that the generative artificial intelligence industry will burgeon into a $1.3 trillion sector. First on our list, we have Advanced Micro Devices, known by the ticker symbol AMD, and we have Supermicro Computer, which is identified by the ticker symbol SMCI, where both companies are focusing on the latter aspect of the market because they could potentially experience substantial growth as the AI opportunity expands. AMD stock has seen a remarkable increase of 68% year-to-date, driven by expectations of AI-driven revenue and earnings growth. Although AMD's product launch cycle appears to be slower than its primary competitor, the introduction of new AI chips is poised to become an increasingly vital component of its operations. Thus far, Nvidia has been the primary beneficiary of the generative AI trend, with sales of data center chips like the A100 and H100 significantly boosting revenue. AMD, on the other hand, entered the scene later. In the fiscal third quarter, its data center revenue remained steady at $1.6 billion, despite the launch of its new MI300A and MI300X graphics processing units tailored for AI and cloud computing workloads. Nevertheless, AMD's management expresses great optimism about the potential of this new hardware. According to CEO Lisa Su, multiple, large hyperscale customers have committed to purchasing M1300 chips, and AMD anticipates these products will contribute a substantial $2 billion to its revenue in 2024. In the long term, investors can also anticipate a recovery in AMD's other business segments, such as gaming hardware, which adds more good news to AMD's growth story. For investors, AMD's forward price-to-earnings multiple of 26 appears quite reasonable, particularly in light of its exposure to a rapidly growing and potentially influential industry like generative AI. Next up, we have Supermicro Computer, which has witnessed a significant surge in its share price, rising by 192% year-to-date, paralleling Nvidia's performance, which has seen a slightly higher 204% increase in the same period. Supermicro's upward trajectory can be attributed to its robust industry partnerships and relatively modest stock valuation in comparison to other AI-related options. In contrast to AMD and Nvidia, which address the AI opportunity by supplying specialized GPUs, Supermicro offers pre-assembled servers designed to facilitate the utilization of these chips for AI and other data center workloads. Although it operates in a competitive sector, Supermicro stands out due to its association with Nvidia and its emphasis on energy-efficient designs, crucial for cost-effective training of demanding AI platforms. Supermicro's management forecasts sales of $10 billion to $11 billion in fiscal 2024, marking a 47% increase from the $7.12 billion generated in the preceding year. With a price-to-sales multiple of 1.98 in comparison to the stock market benchmark average of 2.37, Supermicro Computer's stock offers a relatively economical way to invest in the AI opportunity. Just as previous technological breakthroughs like the internet in the early 2000s generated substantial hype that didn't always translate into sustained shareholder value, artificial intelligence has also stirred excitement that may not consistently yield strong returns. Nevertheless, companies focused on infrastructure are typically considered safer investments because of their picks and shovels approach, which results in more robust market positions and less competition than consumer-oriented alternatives. We also see that Paul Tudor Jones highlighted the challenges faced by stock analysts, from geopolitical conflicts to intricate fiscal dynamics. However, in the face of adversity, growth stocks demonstrate remarkable potential. History has shown that they not only weather storms, but often thrive in such conditions, making them prudent long-term choices for those with a forward-looking outlook. This leads us to talk about Nvidia, which is renowned for its leadership in GPU chip production, and has witnessed an astonishing 187% year-to-date increase in its stock price. The insatiable demand for AI and its intensive computational requirements has been the primary driver behind these developments in the past year. Even as geopolitical dynamics fluctuate, with the US imposing restrictions on AI chip exports to China, Nvidia remains steadfast, securing a dominant 90% share of China's AI chip market. Beyond AI, Nvidia is venturing into generative technology and has teamed up with ARM Holdings to explore CPU design. With an adjusted EPS of $2.70, Nvidia effortlessly surpassed the expected $2.08 in its latest quarter. The company's revenue experienced a remarkable 101% year-over-year growth, reaching $13.5 billion, far exceeding the projected $11.2 billion. Looking ahead, Nvidia anticipates revenue of approximately $16 billion in the upcoming quarter, positioning the company for continued outperformance. Adding to this, Jensen Huang has announced a substantial $25 billion stock buyback plan. Up next, we have Microsoft, which continues to lead the AI revolution by integrating ChatGPT into its array of products and services, from Bing to Azure cloud services. Despite the financial challenges associated with operating Copilot at a monthly deficit of $80 per user, Microsoft's long-term vision remains clear. With plans to introduce its own AI accelerator chip, the company aims to reduce its reliance on third-party suppliers and enhance cost efficiency. In its first quarter results, Microsoft reported a 27% increase in net income, driven by prudent cost-cutting measures. The company generated $56.5 billion in revenue, a 13% year-over-year increase, with Azure contributing a 29% boost in revenue. Looking ahead, the company is expected to achieve a healthy 15% revenue growth in the upcoming quarter, ranging between $60.4 billion and $61.4 billion. Microsoft's $13 billion investment in OpenAI is beginning to yield returns, with substantial gains anticipated by 2024 as more AI-focused products enter the market. Our next pick is Uber Technologies, which has redefined both transportation and delivery, making it one of the top growth stocks to consider. Its second quarter earnings demonstrated a 14% year-over-year increase in revenue, reflecting its evolution. Despite a $2.6 billion net loss in the second quarter of 2023, their mobility segment is driving a turnaround with a 25% growth rate. Uber Eats, its food delivery arm, also performed strongly, with a 12% increase in gross delivery bookings totaling $15.6 billion. Coupled with a 14% rise in delivery sales and a remarkable 232% surge in adjusted EBITDA profit, Uber is on a positive trajectory. Amid economic challenges, Uber One, with its involvement in various delivery domains and a growing membership base, solidifies the company's status as a promising growth giant. You should also know that Meta Platforms, formerly known as Facebook, has become synonymous with pioneering advancements in the tech industry. Its recent third quarter results underscore this, with a substantial 23% increase in revenue, reaching $34.15 billion. Accompanying this is a remarkable 164% increase in income to $11.5 billion, underscoring Meta's market dominance. Notably, daily active users grew to 2.09 billion in September, which is a 5% year-over-year increase. While sales have surged, it's worth noting the corresponding rise in costs and expenses. Meta continues to generate significant profits while investing more, allowing its shareholders to enjoy robust gains, making it one of the top growth stocks to consider for dividend seekers. Furthermore, its future appears even more promising, with plans to integrate AI chatbots into flagship platforms like Facebook and Instagram, creating futuristic and interactive social spaces. The next stock on the list is NextEra Energy, which maintains a strong presence in the energy sector, particularly in Florida, playing a pivotal role in electricity generation, distribution, and sales. In its recent third quarter announcement, the company reported a GAAP net income of $1.219 billion, or 60 cents per share, down from the previous year's $1.696 billion, or 86 cents per share. Moreover, NextEra Energy declared a quarterly dividend of 46 cents per share, set to be paid on December 15th, offering a forward dividend yield of 3.21%, demonstrating its commitment to shareholders. In a strategic move to focus its operations, NextEra's subsidiary, Florida Power and Light Company, has agreed to sell Florida City Gas to Chesapeake Utilities Corporation for $923 million in cash. Lastly, we have Li Auto, which is a trailblazer in the Chinese EV sector, consistently outperforming its competition. A significant part of its appeal is its electric vehicles, which offer extended ranges, fulfilling the promise of going the extra mile. The company is expected to release its third quarter figures, with early indicators suggesting strong performance. With a year-on-year delivery growth of an impressive 296%, reaching 105,108 vehicles, it's reasonable to anticipate a Li stock rally. The upcoming launch of the Li Mega has generated excitement among industry observers, signaling positive prospects for the company's future growth. Li Auto's aggressive expansion of its retail footprint in China further enhances its position. Financially, the company reported substantial cash and equivalents of $10.17 billion at the end of the second quarter, providing Li Auto with the resources to further innovate its products and expand its retail presence. With new vehicle models on the horizon and the highly anticipated Li Mega set to debut in December, the EV giant is poised to make a significant impact on China's roads. Thank you for watching. If you want more videos on the top stocks to buy, then please press the like button, comment, and subscribe. With all that being said, I wish you the best of luck and happy investing.